What's going on, guys? My name is Richard and welcome back to another stock market outlook video. And before we cover the price action of the major indexes, I do want to quickly go over the results of the most recent sentiment survey that I post every single week on Twitter. So each week I post this question. In 1 week, the NASDAQ 100 will close higher, about the same, or lower. And the idea is that this could be a contrarian indicator, meaning that if the majority of people think it's going to go lower, that the indexes will actually finish strong the next week. And if most people think it's going to go higher, we might have a pullback. So this week marked the most significant shift in quite a while. You can see last week people were very bullish, up 47%. And then quickly this week, after 2 bad days to close off the week, we're down to 25.4%, which if you go back historically is pretty low. And this isn't a perfect system, obviously. Sentiment surveys are always kind of secondary to the actual price action for me. But this significant shift to being very defensive stuck out to me. So I just want to keep you guys informed about this and what it could possibly mean about the price action next week. So with that being said, let's go back and talk about the weekly price action of the major indexes, because once again, I think this could be evidence in support of the bulls, because all 3 major indexes that I followed, the NASDAQ, the S&P 500, and the Russell 2000, they all closed basically within 2% of the past 3 weeks. So they've been very tight, which in my opinion is exactly what we needed after a big run up 30% on the major indexes. So I think it's completely normal to have kind of a nice pullback, consolidation period before we're ready to make another move upwards. Now, obviously, just because the price action is very tight doesn't mean we can't continue to the downside next week. And I think that is an equal possibility. I just want to say that in my view, this isn't too negative, honestly. Even though we try to go up and then we're knocked back down, I don't think it's the end of the world just yet. And on the NASDAQ, we're still above an increasing 30-week moving average, which is a stage 2 uptrend. But if we go to the SPY, you can see we're actually below a decreasing 30-week moving average, which means we're in a stage 4 downtrend. And if you follow Stan Weinstein's kind of stage analysis, you know that you never want to be investing when an individual stock is in a stage 4 downtrend. So this is a negative for the overall market. And next week, if we do have positive price action, I do want to see the SPY move up, and it probably won't retake the 30-week, but I do want to see the 30-week flatten out a little bit more and potentially start moving upwards. So overall, the weekly price action on the NASDAQ, the SPY, and the IWM, the Russell 2000, to me just signifies consolidation at this point. It's not entirely negative. Now going to the daily chart, and let's take a look at the NASDAQ. We'll take it day by day and talk about each of the day's price action. So on Monday, we gapped up, had a pretty tight range, and overall finished lower. So a positive day overall with not the best close. And then on Tuesday, Tuesdays just haven't been good recently, but on Tuesday, you can see we gapped up and then had the worst possible day, an outside day with a close right near the low of the day. So anything in the lower thirds for me is a negative. And especially since we gapped up and then closed, that was the worst possible scenario. But on Wednesday, we had a positive expectation breaker because after this type of day, we would expect it to continue lower. But instead, we had a gap up and a nice close right near the top third of the trading range. And on Thursday, we had a kind of mixed day, a slight gap up, a reversal, and then a close near the top third. But it's kind of a hesitation day for me. And then on Friday, we had a big gap down and overall a pretty poor close. So taking it in context, as we did with the weekly, it's not too bad. But the expectation right now for Monday is that we continue lower because of this negative Friday. Taking a look at the volume, you can see it was lower on this Friday, which is a positive for me on the NASDAQ. That means it wasn't a distribution day. But if we go to the SPY, you can see it was also lower, but we had a pretty bad day on this Thursday. So overall, as we'll see when we check out the Ibd Big Picture article, we now have one distribution day on the NASDAQ and on the S&P 500. So that is kind of the individual price action of those. And taking a look at the Russell, you can see we're now right at that 50-day moving average, which I would like to see it reclaim. It was doing very well recently, but then the latter part of the week was pretty poor. And now let's take a look at the financials. You can see they weren't able to reclaim that 50-day moving average. And taking a look at the VIX, this is another reason to be a little bit more cautious because we had a big spike on Thursday and then another big jump on that Friday. So you want the VIX to be as low as possible if you're a trend follower and can slim type trader. And right now it's going the wrong direction. So that is a negative for me. And taking a look at the FFTY, which is the Innovator IBD 50 ETF, you can see a little bit about how growth stocks were performing. So a bad Thursday, bad Friday, and I definitely felt this in my own portfolio. I was stopped out of a decent amount of things on this Tuesday, and it seemed like any potential new positions that I took up on these 2 days didn't really work out that well. And taking a look at gold, you can see it's hanging in there. We had a Bollinger Band bounce on Friday, and we'll see how that carries on next week. So now that we've talked about the major indexes, let's now check out how my watch list from this past week performed. And let's sort by that weekly change and see which was the best performers and which were the worst performers. So overall, market taxes did pretty well. It's staying above this green line, which is nice. It's got a nice trend the past few weeks. And then we also had another standout coup, which had an inside day on Friday on lower volume. So this is a positive for me. This is definitely actionable next week. It's right above those resistance levels. And overall, it's a strong fundamental stock, and it'll definitely be on my watch list going forward. Team also was overall positive. You can see actually a nice reversal on Friday because it gapped down, but then finished in the upper third of the trading range. So that's a positive. And other than that, we had some bad performers. AMD kept falling. I think it could meet its 50-day moving average right here, which is also where the prior all-time high is. So it's very important that it holds this level, in my opinion. Although you can see that it dropped through its Bollinger Band right here, so we could have a Bollinger Band bounce early next week. So that's something that I'll be watching for because I do want to take up a position in AMD. I really like those annual estimates. SDGR also dropped overall, but everything seems to be pretty normal, and it was actually up on Friday, which is a positive. So anything that was up on Friday should be something to watch, or was within, or was less than 2%, honestly, because that signifies that people really weren't selling, even though overall it was a pretty bad day. RNG also fell, but it's holding its 50-day moving average. LVGO, another promising IPO, is hanging in there, still below that green line, and that's why it's very important to wait until a substantial green line breakout. So if this flattens out and forms a green dot, that'll probably be an entry signal for me. So overall, not the best performance of my watch list ever, and that kind of is indicative of the overall market conditions. So even if you pick pretty strong stocks, I mean, I've got Nvidia, Netflix, Adobe, Microsoft. These are strong fundamental growth names. If these types of names aren't working, that doesn't always mean that you picked bad stocks. It could just mean that the market isn't yet ready to foster those breakouts in those growth names. So keep that in mind, especially if you get stopped out of a lot of positions in a row. That could just mean that the market is telling you to slow down a bit and kind of wait for things to move back up. So keep that in mind, and I will be posting another watch list tomorrow, so stay tuned for that. And now let's go ahead and check out the Ibd Big Picture article from investors.com. So overall, they talk about how the stock market is pausing, but they also talk about a few warning signals down here that we'll get into. But overall, the NASDAQ plunged 3.2%, the S&P down 2.8%, and the Dow Jones down 2.6%, and the Russell 2000 down 3.8%. So a bad day for those small caps. And overall, they talk about how it wasn't a distribution day, even though it felt pretty badly. And down here, they talk about how the indexes closed below their 10-day moving averages and also below the trend line from the March lows. So these are two significant things here, and that is a case for the bears at this point. So keep that in mind. On Friday, earlier in the day, I noted that actually the S&P 500 and NASDAQ were both holding their 10-day moving averages, but obviously that changed with the close. So this is bearish for me. And overall, we still don't have that many distribution days, only one on the NASDAQ and S&P 500, which is another reason why I'm not overly negative with the price action last week. And overall, they talk about Amazon and Apple, which account for a significant portion of the NASDAQ. And they also talk about the new trade war that's starting with China, which is very reminiscent of earlier this year. So that is kind of the IBD big picture. They still are in a confirmed uptrend. And overall, we only have one distribution day on the NASDAQ and S&P 500. So stay alert with those earnings and keep watching those key stocks, Amazon, Apple, Netflix. Those might indicate before the overall indexes what's going to happen. So to round off the video, let's go ahead to wishingupall.com, and you can see that the GMI has now turned green. However, Dr. Wish is still a little bit hesitant to jump into the market. And you can see he also talks about how the SPY is in a stage 4 decline. So like me, he would like to see it reclaim that and start a stage 2 uptrend. And he also points out that few stocks are hitting new highs successfully, and that's a core component of that GMI. And that isn't prone to good market conditions for CanSlim and also his method. So keep that in mind. Overall, I still think we are in a confirmed uptrend, and that the market action Monday and Tuesday will really clear up basically what direction we are heading. So keep up to date, keep those watch lists fresh. Note any stocks that are kind of bucking the downtrend and are either up on Friday or overall didn't close down as much as the indexes last week. But that's it for me. Make sure you guys tune in tomorrow for my next weekly watch list. Go ahead and leave a like down below and subscribe if you're new to the channel. And I'll see you guys in future videos.